good talking to you. First things first, is there any update on the demerger of the cinema business and transferring it to the A2 cinemas?
No, it's totally completed now. We had set a date of 31st of March to spin the cinemas division off into a separately wholly owned subsidiary, and as of 31st of March that has been completed. So now going forward all of the cinema operations are in a wholly owned subsidiary called Mukta A2 Cinemas.
Okay, so that demerger has taken place. When we last spoken to you, you had indicated about your capex plans. You're looking to hit 100 screens by the end of this calendar year. Is that plan on track?
That the effort is to achieve that is still on. I think that our current portfolio sort of gets us to about 85, and if you're very optimistic, maybe about 90. But in the middle of that, you'll probably see some opportunistic management opportunities that may crop up. So we may well get very close to 100 by the end of the financial year, yes.
All right, Rahul, are you looking for any inorganic acquisitions to reach that particular mark?
No, not really. We're not looking at acquisition of cinema screens. What we are looking at is we're looking at taking over existing running single screens and using bringing them under our umbrella and using the sort of economies of scale that we have to make them more synergistic. So, that's something that I do see us expanding into. We don't have any plans at the moment for any inorganic growth or any acquisitions.
Okay. What about selling of non-core business?
No. In fact, we're sort of taking steps now to move to get back into those businesses, I think, in a significant way. And towards the end of the year, we'll be making a couple of announcements on a couple of new films that we intend to do. So, we intend to fully get back into the content business, into the software business. So they won't be such a drag on the profitability.
All right, Rahul, as you speak, in fact, the street likes what you're saying. If I just pull up the intraday chart, the stock was more or less flattish when we started this interview. That, in fact, has spiked up. It's up close to around 4.5%. It's moving to close to around a 5% gain as we speak. So, Rahul, I have to ask you this. Will you list the A2 cinemas separately?
Yeah, it's possible. I mean, further down the line, I don't see that happening in the short to medium term. I think the business still now needs to find some scale before it looks at a listing opportunity. But certainly, one of the reasons for spinning the division off into a separate entity was to explore all of those possibilities. And, given the right time, I think we will explore them at that point.
Okay, so you could look at listing A2 cinemas, but not in the immediate future. Your losses have increased for FY17. So if you could tell us, when do you expect to turn profitable?
No, I don't think so. I think that FY18 you'll see us bounce back to profitability. A great deal of the losses this year are on account of pre-operating expenses of the cinema in Bahrain, which is a one-off cost. On an Indian accounting standards, we'd be able to capitalize most of that cost. But accounting standards in Bahrain did not allow that to happen, so that had to be put through the bottom line this year. A lot of the new theaters that we've started this year, so Bahrain, then Panvel, Topiwala in Bombay, Aurangabad, they'll all have now reached maturity this year and will bounce back to profitability. So I think that overall, 2018, with a strong content pipeline in place, you can see us bouncing back to profit next year.
Rahul.
Okay, Rahul, we leave it at that. Thank you very much.